Hello guys, and welcome to this episode of my trading videos. In this episode I will show you how to effectively use your indicators. In the last video I showed you how to set up your indicators. Okay, so let us start. But before we start, please, if you don't know about indicators, you go and read about them. Go to your lesson, read more on your indicators. They help a lot. Okay, they help a lot. So let's see how to use these indicators. On my window here I have one indicator here, I have one here, I have one here, I have one here. They are all indicators, right? So on my main window here, the moving average is my indicator. The yellow and the red lines, they are my indicators. So let's see how to use them. Now when you see a market move like this, let me tell you something very important. It is the market movement, okay, that determines the type of indicator to apply. You don't just see any market and then apply any indicator. No, it is a movement of the market, the pattern of the market that determines the type of indicator to apply. For instance, this market is trending. It's trending upward. This market is trending upward. So we can apply the bull power here. We can also apply this indicator here. So let me draw my sorry. Let me draw my trend line so that we can understand better. I can use my trend line. Okay, this is my trend line because the market is moving, it's trending. Now watch very well. Watch very well. Watch very well. This line you see here is your line 0. Now a little bit above your line 0 is your line 10. This is your line 50. This is your line 90. And then above your line 90 is your line 100. Okay. Now between your line 90 and 100 is your overbought zone. Overbought zone. Between your line 0 and 10 is your oversold zone. So when you see any movement in this zone, it is a sell signal. It tells you that it is giving you a signal to sell. And when you see your moving average cross your line 10 down, approaching your line 0, it gives you a signal to buy. I hope you understand. Let me come again. Let me come again. This is your line 0, this is your line 10, your line 50, your line 90, and your line 100. Between your line 0 and your line 10 is your oversold zone. Between your line 90 and your line 100 is your overbought zone. So when you see your moving average cross the 90 line, approaching the 100 line, it is giving you a signal to sell. And when you see your moving average crosses the line 10 down, approaching the line 0, it gives you a signal to buy. So that is how you use this signal. Let us do an illustration so that you understand. Now, in this market that is ranging, we have a signal here. We have a signal here. We have a signal here. We have a signal. Okay, let's focus on the sell signal first. Let's focus on the sell signal. All right. So we have a sell signal here. We have a sell signal here. We have one here, and one is also here. This place you see here, look, it corresponds with this one, and this sell signal corresponds with this one, and this sell signal, this one corresponds with this one. There is another one here that is yet to come down. Okay, so that is how to use this one. Now let me explain one more thing. Let me zoom out so that you see. Now this market is ranging, moving upward. We have a sell signal here. We have a sell signal here. Okay, here was consolidating. It was consolidating, trying to go down. But until now, look, it was when the candlestick broke the EMA 13 that the thing went down. So if you see this candlestick consolidating here, don't take a trade until it breaks the EMA 13. That is when you take a trade. And one more thing, when it breaks the EMA 13, it will try to retest that EMA 13. So you can wait. If you don't want to take an instant shot, okay, you can just wait until it come close to this EMA 13 again. Then you can take your shot. This is your entry point. This is your entry point, okay? And because it is trending, be very careful. Because it is trending, be very careful. Once it come down, be observing. This is where we bought. Sorry, this is where we sold. This is where we got a signal. It came down to this zone. Once you see it approach this zone, you can book your profits. You can close or set your take profit around here, because this is our trend line. This is our trend line, and the idea is once it hits our trend line, it will bounce back again. So that is how you use them. So observe very well. There was a signal here. 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 This is a signal for this one. This is signal. This is signal. This is signal. You see them? So if you have taken your short, you will be in profit. And then book your profit once it approaches this trend line. Is that okay? Now, on how to use the bull power, this one, the last indicator, because you can use this last indicator on the trending pattern too. Now look at this impulse downward here. This is our buying signal. This is our buy signal. This is our buy signal. Now on this other indicator, this is our buy signal. This is our buy signal. You see that our signal, this is our buy signal too. You see our signal is corresponding. The two indicators are corresponding. Look at this one. We have a buy signal here, the down impulse here that crosses a histogram downward. That is our buy signal. This place too, look at the signal corresponded with this one, correspond with this one. That is our signal, the down impulse that crosses the histogram down. That is our signal to buy. Another signal is when this candlestick, you see here, you see here, you see here, those are our buy signal. And everything, in fact the three indicators, they correspond. All of them, they correspond. Look, this one is a buy signal because it hits our trend line. It corresponds with this one, which is our buy here. It also corresponds with this one, which is our buy here. Look at this one. Look at it. It corresponds. So everything is in agreement. Okay, so that is how you use these indicators. But let me show you one important thing again, because indicators alone sometimes can be deceptive. Let me show you the candlestick pattern. They helps a lot. Candlestick pattern, they help. Now we have a signal here. We have a signal here, but this trend did not come down